Hey guys, so we're going to run over Fibonacci today, and Fibonacci is a tool used in the foreign exchange markets, crypto markets, any trading markets in the financial markets that allows us to measure pullbacks and retracements. So on TradingView, you can find your Fibonacci tool. If you go to this third one down, it's this one here that says Fib retracement. There's a heap of other ones. I don't personally use them. I don't need to use them for this strategy. So we're going to use the Fib retracement tool. So I've added it to my bar here. And the coordinates that I put on are the 50% and the 80% when I trade. Now, let's just put a normal Fibonacci tool on here so you guys can see what it is, right? So like I was saying, the Fibonacci tool measures prices retracements and pullbacks to catch the next impulse. Now, like we spoke in an earlier video, the banks like to, buy at lower levels and sell at higher levels. And this tool is going to help you, analyze how deep and, far they are going to drop before buying again, right? Obviously not bypassing the 1 and 0. So all these numbers are 0.382, 0.5, 71, 786, so on and so forth are percentages, right? Where 0.5 being 50%. This is called your equilibrium mark because it is the middle point between top and bottom. So it would make sense that 71 is 71%, 78.6 is 78.6%. So what does it mean? It means that they are at a 78.6% discount. Right, so the market is up here like this, and it is at a 78.6% discount before continuing higher. From this point here to this point here, if I draw my fib, they are buying at a 78.6% discount. So Fibonacci tool measures prices pullbacks. It does not move the market. You guys need to understand that. It is just there to help you analyze and get a better entry. Don't use it solely to realize, okay, it's gonna definitely hit this mark. It's not, right? Price can do whatever it wants. We just use it to help us. So how do we get our entries based upon this? Well, like we've been discussing, POIs and institutional candles, if that lines up with your Fibonacci, you can take a trade, right? So hopefully you guys understand what the Fibonacci tool does. Now let's go and actually analyze it on the market, for example. All right, let me go find a pair that we can just use. GU is very well to use. Let's pull back to about here and I'll show you. So working on the daily time frame like we always do. I always love this trade that we call out because it is like the most perfect example. So remember we have that daily candle that the market come back into. Now, where's the high here and where's the low here? So if I draw this line out to the bottom here as well, and I use my Fibonacci tool to sort of measure, I'll show you guys what happens. So when you are measuring a pullback for a sell, you always start at the top and pull down. And vice versa. If you're measuring for a buy, you'd start at the bottom and take it up, right? So as you can see, price has pulled back into a discount of around 78.6%. Now I use personally my trusty 50 and 80 only. Where is it? And you can see it hits that 80% mark perfectly. So why do we look to take sells from these areas? Well, like we said, the banks come and get a better entry here. So price comes up, you get a discount, and you continue down into your desired direction, as you can see there. Now, why 50 and 80? 50% is going to be your ideal level. 9 times out of 10, the banks want to close at least half their orders. So that is where the 50% mark comes in. As you can see, you got some reaction there. 80% for me is my extreme area. I should not see the market go, past 80, 90%. If it does and it hits what we call our extreme level right up at the top, that's fine. But 9 times out of 10, you want to see something happen in those levels. This is why I like to use the 50 and 80 as my guideline to enter. And then all you do is wait for your confirmations. So how we trade it, guys, is as price is moving up, for example, like this, what I do is I take my fib from the bottom to the top, and then I'd wait for the market to approach these areas, and then I would take more buy positions to the long the back up. So you would most likely have an institutional candle in here, the down before the up, and then boom, you would take a trade in here. So hopefully that makes sense, guys, on how you trade with the Fibonacci tool and use it to your advantage in the market.